When are you expecting the Fed to make a formal taper announcement? Could it happen at Jackson Hole next week, or is this going to happen later on at a formal FOMC meeting?
I don't think it'll happen at Jackson Hole. By the way, thanks for having me. Good to see you. I don't think it'll happen at Jackson Hole. I think they'll just talk in broad brush about, the impacts of quantitative easing, et cetera, which I think is more like signaling. There are governors who are sort of suggesting that maybe this come up at the September meeting, if not later in November. And that's possible, but it's not the governors that make the decision, it's the chairman. And the other central banks around the world are sort of mixed on this. The Bank of Japan is actually starting to taper a little bit. Nobody's really noticed that. The Bank of England sort of talked about it. The European Central Bank has no interest in tapering and is probably going to increase their asset purchase program in March. So Jackson Hole will probably see some spirited debate about the efficacy of all of this. I don't really see a need with COVID acting the way it's acting, with case counts rising, sort of like what you saw in New Zealand. And also with, some of the inflation, transitory inflation, things like lumber already starting to dissipate, for them to be in any hurry to taper. In fact, I'm not really sure why they would right now, other than the marketplace sort of suggesting it. But ultimately, it's Powell's decision, and I don't think he is convicted that we need to be tapering at this moment.
Well, I mean, as to the reasons why they would, I guess they've been monitoring the inflation prints. They've obviously mentioned time and time again that it's transitory, but the labor market data so far has been coming pretty strong. A raging debate going on, and we're not going to solve it right now. But to your point, in some of your comments, you've mentioned that one has to distinguish between tapering and tightening. And even though they will be buying less bonds, they're still effectively doing quantitative easing until the time they've completely stopped. So that is an important factor to consider as well. And perhaps one of the reasons why, say, if you look at the market reaction, stock markets have completely brushed off the prospect of a tapering announcement. And you could say the same thing about bond yields, which refused to budge from about 1.2%.
Yeah, I think people overstate the linkages between quantitative easing and quantitative tightening, what's going on with interest rates and what's going on with the stock market. For instance, if you go back in the time machine to 2007, central banks around the planet, and I'm including the US, Japan, Europe, and the Bank of China, had about 500 billion in total assets. Today, they have 30 trillion. In 2007, inflation expectations were 2.3% for forward 10-year look. It's 2.3% today. So there is no clear linkage between quantitative easing and inflation. So in the US, the size of the balance sheet is about 30% of GDP. In Japan, it's 130% of GDP, and inflation is zero. So I think those linkages aren't that clear. I think what matters for interest rates is inflation expectations, and all this quantitative easing hasn't changed that at all, which is something I'd want to debate if I were at Jackson Hole. In regards to the equity market, we had tapering back in 2013, 2014. The S&P went up 20% during that period. We had quantitative tightening back in 2018. The S&P went up 20% during that period. And so I think the algorithms are going to sell off the market with any tapering talk, but I think that's a short-term issue and probably a buying opportunity because the fundamentals of the economy are strong. The quantitative easing, from all I can tell, is just sort of signaling support and monetary stimulus. But other than that, the linkages are really not very clear on how all this quantitative easing impacts anything other than sentiment.